Welcome, ladies and gentlemen, to Commodity TV here at Resourcing Tomorrow, London, Mines and Money. And yeah, this is our last but not least interview. We want to talk to Doug Ramshaw, the CEO of Minera Alamos. Doug, pleasure seeing you after such a long time.
It's been a while. Good to see you, Jochen.
Good to see you. It's great. A lot happened. The year was, I would say, really tough with gold markets, with stock markets was a nightmare. But anyhow, how was the year for you? Because you are already in gold production now.
Yeah, we're in production at our first low capex mine. I'm not going to argue with you. It's been a tough year. Yeah. 2022 was a very good year for the company, and 2023 has been pretty lackluster. And I'm happy to say I think 2024 we're going to rebound, get the first operation up and running the way we want it, and we've got a second bigger low capex project that we're looking to build in the second half of next year. So yeah, the best way to play a high rising gold price is to mine more gold, and that's exactly what we expect to do in 2024 and beyond.
Okay, super. What have you produced this year?
Oh, I knew you were going to ask me that. This year, a very modest amount. We actually made a conscious decision. The answer is probably going to be in the order of 4,000 or 5,000 ounces, down from 14 last year. This is at a mine that we only spent $10 million building. It's a small starter mine. Should get to about 20 to 25,000 ounces a year. And that's the plan for 2024 and beyond. And although that sounds modest, it can spit off $8 to $10 million in free cash flow, even on those levels. So it pays back its capital every year. A nice little ATM in a tough market where people are trying to raise money. We don't need to. So this year was a tough year, but it was a management decision to throttle back production. I know our shareholders didn't like it. It was the right decision. We protected the balance sheet. So we got $20 million in working capital. Oh, nice. Which we could have really blown through if we decided, let's push production at a time where there was a heavy drought in northern Mexico. It would have come back in bitterness, and shareholders would have been way more mad if we'd run out of money. Instead, we got $20 million in working capital, and we're set up for the future.
And those $20 million, would that be enough for the next project to fund that already?
It will support it for sure. We're actually going to take, we've negotiated, the next project's a 60,000 ounce a year project. Larger. 8-year initial life. We know it can get bigger. It's only got a $25 million capex associated with it. We've got, I know people talk about industry leading and world class and district scale. We are genuinely industry leading low capital intensity mine builders. That 60,000 ounce a year operation is funded upon receipt of permits. It's in permitting right now. We have a $15 million loan and $10 million US royalty facility to fund it. And because I mentioned that we know it's going to be a bigger operation than that 60,000 ounce, we did a royalty with a non-traditional royalty company. So we were able to negotiate a buyback of 2% of that 2.75% NSR. You know royalty companies, Jochen, the last thing they want to do is have their royalties bought back.
For sure.
We've negotiated a way to do exactly that.
Okay, super. Let's assume that you bring the first smaller operation also to full capacity and the 60,000 ounces. What would be then the total production for the year, and where do you see your AISC in the future?
Yeah, so all our projects are sub-1,000 AISC projects.
Oh, wow.
And can go lower. So with Cerro de Oro, our second bigger one, and Santana operating properly, we're about an 85,000 ounce a year production profile that will run at 1,000 AISC or less. So at $2,000 gold, we're spitting off 85 million US of operating cash flow, and with limited debt and very limited overall group expenditures, tremendous free cash generation. In fact, for people that spend money with the discipline that we do, our biggest challenge when we have maybe $40 million of free cash flow in a year or two's time is how do we spend that efficiently?
Dividend.
Exactly. No. Yeah. I own 9 million shares of the company. I bought 2% of the company, and honestly, I want to align myself with my shareholders. But I can make more off a dividend than I take from the salary, in terms of salary from the company. I hope I have a bigger salary in time, but I think we have to be up and running and making real money before we start thinking, well,
Super.
why aren't I paid more? So yeah, dividend, reinvesting in the growth of the company, keeping some of that money on the balance sheet for a rainy day, all part of the plan, Jochen.
Yeah, super. Maybe a share buyback could be also part of that.
Yeah, some people
That's
like
fine.
buybacks, some like dividends. I'm
Absolutely.
a dividend fan myself.
Yeah, super. Me too, definitely. That's for sure. So then let's say you have 2 projects in production, a 3rd project on the horizon?
Yeah, we actually have a 3rd project already. It's permitted, fully permitted to build. We just want to grow it bigger, the resource bigger first before we actually construct it. It's a 3.5 to 4 gram open pit, 6-to-1 strip. The 2018 PEA called for $440 AISC. Super, yeah. It's
wow.
Incredible margins on it. Again, it's another low capex build, $26 million in 2018, probably in today's dollars, maybe it's 40. Perfect use of some of that cash flow from Cerro de Oro to fund the building of the next one. So we already have that sitting, waiting in the wings, and we're looking for other things to augment that schedule. So the current assets we've got can probably, on a base case, produce about 150,000 ounces a year once they're all up and running. But they've all got upside cases, which probably can move that to closer to 200,000 ounces a year.
Wow, that sounds like a game plan, I would say. Where do you see now the average mine life by today, and where do you see, let's say, exploration potential to enlarge that?
Yeah, so Santana is probably a 5 to 6 year mine life right now, but obviously plenty of runway to explore the property and grow that resource and mine life. Cerro de Oro, the base case is about 8.5 years mine life. We know we've got an upside case, which is 11 to 12 years, and in fact we're permitting for that upside case. We're so confident in it. Fortuna, as I said, it's small. It needs to get bigger. Although the economics are amazing, we based it around a high-grade starter pit of 5-year life. So we know we can. We don't really want to build it until we've demonstrated the ounces there to support 7 to 8 years. And as I said, that's a perfect use for what are we going to do with this money kicking off the first projects, where we can drill some of our other ones and grow the resources and grow the production profile organically.
Absolutely. So that means through the organic growth, you can do that game the next, 15, 20 years.
That's the goal. I aim to stick around that long.
Fantastic. Hey, sounds like a super plan, and really glad because we spoke years ago on your projects, and now you are there. Now production is moving. That is great. So thank you very much, and I wish you Merry Christmas and all the best.
Thanks, Jochen.
Thank you very much.
To you.
Thank you. Yeah, ladies and gentlemen, there was Doug Ramshaw, the CEO of Minera Alamos, and you heard it. Finally, the company is really in production. Things are working. Things are growing. The 3rd mine is on the horizon. 150,000 ounces in maybe 2-3 years. 200,000 even possible. And I like the fact that this is super low capex, low AISC. That's exactly what you want. That means the margin is there. Really fantastic. Check it out. Share price has already, went up, and I think there's much more here in the case to do so. So thanks. That was it from London. All the best. Merry Christmas.